All right, hey, Sam back with you here. Wednesday, January 24th. We're midday. Final coin of the day upon request from the members. This is NEO to the US dollar, whereas we're forced to trade against the dollar tether. Now, NEO, of course, you know, major crypto here. So we're at market cap of $9 billion. Yeah, very high on the scores here. I mean, this has been around for a while. I mean, this is a pretty strong project, and no doubt about it. Now, what's interesting about NEO is that the trading is split evenly between the dollar and Bitcoin. Slight, I mean, almost identical between the dollar tether and Bitcoin. Now, I happen to have it here on Bittrex, as that's where a majority of my members are trading it. You know, it's right. So people don't love to trade against the dollar tether, but if you're on Bittrex, this is what you have to trade against. Now, I've done this coin before. And I think I said the last time, this is some difficult Elliott wave counting. This takes a good amount of time to go through here and qualify this count. You know, I mean, to some degree now, you know, we can look at this and confirm this as a third. So I don't know if it makes sense to go through all of this again. As I said, that's a video that's up that you could dig through if you wanted to. But you know, if you want a challenge, bring up a 1 hour or a 2 hour NEO to the tether on you pick your exchange. And this is the difficult count to get your arms around and to try and qualify along the way. This is the section that makes it difficult because of this spike here overlapping. So pull up a chart on NEO to the tether, wick off your major 1 and your 2, and then see if you can get the count that works in there. So I will spare you that detail since I've done it before, but will tell you that having qualified all of this, you know, you sort of end up with the same place you would have ended up if you were just looking at some of the oscillators here. Well, here's a big one. Here's this peak. So likely that's our third. And trust me on this, because I just had to redo it. If this is our 1, 2, this definitely qualifies as a third. All the subdivision that you'd want to see is there. So we can now just assume, okay, I've got a 1, I've wicked off my 1. I've got a 2, I've got a very complex 3, but it gets there. So, you know, all I'm trying to do now, if we, you know, thinking about trying to trade on the right edge of the market, well, so I've got a 2, I've got a 3, and here's my 50 and my 618. So what becomes the question mark now is, do we have the C in? Do we have the 4 in? Well, we went through the 50. We've come back here. Potentially, this is a front run on the 50. So we know we've certainly, we're in the zone where you would expect to see it, and we've got plenty of distance from our wave 1 if we're going to stay impulsive. So that's encouraging, and now we're starting to get a reaction here. So if I go down to the 1 hour and we get over to this side of the market, we can open this up and say, okay, well, great. So I've got a 3. Now I'm trying to put in a 4. So the first thing you got to deal with is this issue that we see in crypto all the time. In that, if this correction is complete, I've got a truncated C wave here. It's not as low as the A wave. And now I don't know how many times I've shown fourth waves and second waves as well, where we get this triangle pattern. I mean, you just see it over and over again. So we're getting this kind of thing here, and then if I put the other side of it on, so then we're getting this action here. So we get this triangle pattern here with the shallow C wave. Typically, a C will extend beyond the A wave. That's traditional Elliott wave relationships, but this triangle pattern just is pervasive in crypto, and it's, again, you're going to hypothesize about it. You know, anxious buyers, you know, not willing to wait for a full correction. Market gets to the 50, you know, NEO's on sale. You know, whatever it is, we're just seeing it over and over again. So, you know, the challenge becomes, you know, if you're you know, just learning Elliott wave, you're down here waiting for the C wave. You're down here going, oh, well, I know the C is, you know, typically going to go below the A wave. Well, if you've traded crypto long enough, you know that is actually the exception rather than the rule. This has become much more standard. So all you can do is try and qualify it and go, okay, well, let's open this up and see if it makes sense. Can we get the kind of structure that would give us confidence in a buy? Well, the first rip down, well, that we can see a 1, 2, 3, 4, 5. So we get 5 waves into an A wave. So that's technical and it works. We get through the 50, but I've got a good 5-wave structure to tell me that there's my A wave. Then I get an A, B, C into my B wave. All right, so looking at that, knowing that a B wave can be anywhere from the 50 to the 786. I mean, those are your high probability zones. So I'm just going to measure my A wave, and what do we do? Right into the golden zone. So, I mean, so the algos sell there, and their target is down here. So if we look at that, so for the selling here, here's the retest here back to the 618. So that target, that algo target, is down here. But we're starting to see action here. So what did it run into? It ran into the 50 on the other side. So you defer, if you're trying to trade this, you're going to defer to the larger trend. Larger trend is up. Here's the 50, where I started. When I pulled from the 2 low to what proposed as the 3 high. Well, here's the 50 from that. Here's that 618. Here's the retest of the 50, likely a front run there, and now we're getting a reaction. So the algos that sold here may not get their target. That's right. All they do is they just flip. If it breaks here, then they flip to the next 50, coming back the other direction. Eventually, they get on the right side of it. So we trying to just get in behind them, look here and go, well, if that's a B wave, and if I've bottomed down here, do I have a good 5 wave? Well, yeah, you do. I mean, let me open it up so you can see it better. So if that's my B, right, I can work on the assumption that I've got a good 3-wave subdivision into a B. Well, I get a 1, 2, 3, 4, 5. There's a 1. A, B, C into my 2. Comes right back. That's deep for a 2, but it goes right back to test that resistance. Reaction down. So I get a third. Does that qualify? Well, you want to check it, right? You got to check it if you're going to label it. So I'm going to go from my length of my 1 projected from my 2 and pull it over. Well, here's 100%. So we go to the 1272, certainly longer than the 1 wave, so that qualifies. So I can go 2, 3. Here's my, if I'm just as I did the other way, I'm going to pull from my 2 to my 3. Does that work? Well, here's my 50, here's my 38, so here's the prime time spot for my 4th between the 38 and the 50, a Vegas wave right there, little resistance, all there, down I go for a 5. Okay, so I've got just the kind of structure that I'd like to see. So let me pull this off because I know the chart gets very cluttered here. So if I pull that off, then here's my triangle pattern. So if I work it from the 2, down here. So what are we running into now? Right. So if I pull this from here to here, back into the golden zone, right? Do you see that? So from the 2 down, so I'm just working from the dominant pivot here. So it's damn near a double top. So if I pull from here to here, well, here's the golden zone. Here's the resistance I'm running into. So can I get through that? Well, if I can get through that, not only am I breaking through a trend line here, then I'm getting through that algo resistance here where they'll flip to the other side. So if I can get a 1, 2, and this looks like I'm going into a 3, well, then I get more confidence that I've got my low in here. So I'm going to operate on the assumption that we're going to get through that I'm working with this as my C low, meaning it's my 4 low. So what am I looking for? So remember, if I'm working on the assumption that I've got a 3 in here, if I can get it, I got a 3 in. Here's my 4, and so of course I'm expecting this to go up and challenge these highs and try and get a 5th. So I can just look at that right off the bat and go, okay, well this so far so good. Looks like I've got a 1, 2. Maybe I've got a 3 going in here. Maybe there's just a little more subdivision going in. So I'd like to see that start to take shape to give me confidence that my low is in, and I've got that crypto truncated C, that triangle pattern. So, again, I'm just going to measure these and look for, so the next trade, if you didn't buy this, if you didn't get that right there, because you weren't sure, and that's reasonable, reasonable to be questioning that, so we measure that, and I'm just going to pull from that low to that, potentially that as a 1 high. We go right, here's the 65786 window, so that's good. First algo target met. Here's the negative 100. That usually will line up very close to the 1618. So if I measure it, looking okay, I'm just looking for clues, for tells to confirm that I've got a third underweight. So if I get it right on there, so here's right? There's my high probability window. So if I mark that off, so that would certainly give me more confidence that I've got a third underway. So I'd have a 1, 2, 3. Now I'm looking for the 4 and up for the 5. Can I get a 5-wave structure here? So if I put the wave on that, can I get a 5-wave structure? Well, if I do, well, that confirms my 4 low here. So now I'm feeling better about this. But that's just the start of it, right? So if that's my 4, well, working off of this 50, right? Here's my first algo target up here. So this little 5 wave is likely just the 1 wave of my 5th. So I would go here. That's what we're trying to do. Let me change that color. Do you see that? So we're just trying to get into that. We're trying to get clear on what's happening here. Will the market give us a tell here? So, how will you know? You're not going to know for sure until you get this. Instead of going down here and having another ABC as we did here, right? Instead of getting that, if we go up and we get a 5-wave structure, now I've got a 1. So if you want to be looking for the next entry in the NEO to the tether, the next, I would tell you the safer way to trade it is wait for the next 2. Confirm the 5 waves into the 1. Okay, so if I pull that off. So once we can get this confirmed, then I know that I have a higher degree of confidence that my 4 is in and I've just put in the 1. So where's the trade? So, you could be a buyer at the 4 knowing that if you're going to top here, you're likely to get a retracement. You're going to give back, almost all of your trade if you buy the 4, assuming it, right? So remember, you'd set this up the same way. So if this is your 1 high, you want to see the 4 hold above it. So you're going to look for that. So that's a little chip shot there. That's a little single to try and squeeze a little bit out of that. So then you got to make a decision. If we're going to retrace from this low, and again, I'm hypothetical here. If we put in a 1 there, am I okay giving back that gain just to be positioned here for the potential to be in the 3rd of the 5th? So here's the 3, 4. I'm trying to get into the 5th. All we're trying to do is establish the 1. Once I get the 1 established, the next trade to go for, I would propose to you, is right here. Right here between the 50 and the 618. That's where I would be looking to buy it because this is still unclear. I don't know, because certainly one possibility is we just do an ABC and then we head back down, because remember, we've got those algo targets. Remember these algo targets were here. So when I pulled this and I went to here, there's that algo sold there. There's the golden box on the other side. Here's their target down here. So how do I know? Well, you don't know, but you can get more confidence once you get a 5-wave structure here that this 50 is dominant. We've got the 1. Here's the trade on the 2, because I can enter that and I can say, okay, I can be a buyer here at the 50, or maybe you spread it between a front run on the 50, a front run on the 618, knowing that if that continues to go down, my count is wrong. If this keeps going down, then I was wrong. And maybe we've got something more complex happening. I mean, given the scale of this thing, if I go back to the 2 hour to how big this is, we could have complexity here. This could all end up being an A, B, C of a larger degree. So this could end up being A, B, so of the largest degrees, right? Just so you can see it, because I know it gets hard to see. This could easily be A. Think of Bitcoin is doing the same thing. We don't know. This could easily be A, B, C. Let me get that in white so you can see it. Take the degree up. That's your bear count. That's possible. That's what Bitcoin's doing. Very complex B. So if I pull all the way out on this, does that still make sense? Could that still be? Well, yeah, that could still play. We could easily be going back down here for a big ABC. So you can't get too bullish just because you've seen this. You have to allow for the other possibility. If it fails, well, what could be happening? Remember, if I take this all the way back to where we started, here's my 1 wave high. So all of this complex correction could come all the way down. Algos could get that for this algo here that's sold right here on this golden box. There's their target. That would still play as an ABC relative to this 2, 3. We don't overlap the 1. We're still in an impulse wave. Right? You have to allow for that possibility, which is why I propose to you that whenever you're going in here, you don't just buy it and, if it pulls back, it goes down a little bit, it's no problem. I mean, that's a pretty substantial drawdown. You're really going to bury some Bitcoin there, or well, in this case, some dollars there. You're going to bury some of your capital. How about I say it that way? While you wait for that to recover. Now, does it recover? I mean, so far, they all have. So far. You've been, even if you started buying in here and you average down, if you have the capital to do that, that has paid in 2017. That was the move to make. Does that continue? Right? Are you more like I would do it? I would rather just get stopped out. I'd rather take a small loser. I'd rather wait for this. If I get stopped out at the 786, fine. Not going to kill me, not going to blow my account up. So I'll take the small loser and wait and see what happens down here. Do I get more clarity? What does the story tell me? If that ends up being a B and I'm going down here for a C, well, if you liked it here, you're going to love it here. All right, that's NEO on sale. Can you get it there? If it's offered there, that sure would get my attention, because all I'm doing is just pulling back out and going, well, does that still play? Does that still play as a 3-4? So I get complexity here. That's not surprising. I didn't get a lot of complexity in the 2, so maybe I'm getting more complexity here. Is that a buy? I still got a 3-4. So my 4 would end up over here. That still plays as a 3-4. Targets didn't change. The risk reward got a whole lot better. I mean, that's some serious upside. So you got to make a decision. How do you want to approach the market? You're going to try and swing trade it? Are you just going to throw some capital at it and say check it every month or so, see how it's doing? Or are you going to try and trade it? Well, what I'm trying to show you here is how to swing trade it, and not get yourself in a position where you just get buried in something where something else sets up and I would, except that I've got all my capital tied up in NEO. I'm just waiting for that to come back. That's trader's choice. Okay, guys, I'll wrap it there.